Rohit Srivastava, who's joining in with us from IndiaCharts.com, founder and strategist there. Rohit, thank you so much and good afternoon. Let's talk about markets, right? And Nifty surely seeing a bit of a recovery coming in. Anisha was mentioning it was by Reliance as well today, which is leading the gains. But Nifty 50 at 19,700 doesn't seem like it's able to sustain that. What's the view that you have on the benchmark indices right now?
Yeah, good afternoon. I think today morning's selling can really put people on a back foot, but we are at very, very important retracement levels. If we just look at the rally from the low that we made in August to the high that we made in September, 61% came to around 19,600. And if we stretch it a little, 66% is at around 19,560, which is very close to the low that we made today. So this is an important cluster zone for us to sort of get a potential bottom and start a fresh rally back to new highs. The only question is now, okay, tomorrow's expiration, you do have global negative Qs still floating around. Our markets have been relatively resilient because even though the Nifty may not have picked up, it's not fallen so much, and the broad market indices are actually positive. So I think markets sort of stabilized. It's just waiting for Qs to turn positive for the large caps to really pick up. Expiry and maybe over the weekend, once we get past what is also the US, potential shutdown debate that will go on for a few days till it resolves. I think once we get past all of that, it will create a more conducive environment for foreign flows and for the large cap indices to really pick up. But the underlying strength is there, and I think the weakness is essentially an opportunity for investors, traders, both to be able to build positions at lower levels for the next move higher. I think that is how I'm looking at this move. And so we are at a very, very interesting, good risk reward point, I think, for the medium term.
Right, good risk reward point, for the medium term is what you are seeing. But, I just want to talk about certain sector specific as well. Whether you look at something like an FMCG, that was surely doing quite well. But in the last couple of months, a bit of a subdued move that has actually come in for the Nifty FMCG. Any specific view that you have on this?
Yeah, so we're looking at the FMCG pullback as a routine correction. It's lasted for some time, fine, but I think we should be at the fag end of it. In fact, interestingly, out of a group of indices, I was just running a scan, which are the relative outperforming indices, simply by saying that, okay, which of them are above the 20-day moving average. FMCG tends to be one of them, along with the PSU stocks, the PSE Bank Index, which has been doing well, the Mid-Cap 100, the energy and auto. So all of these segments are essentially holding above the 20-day moving average, even as the Nifty is, close to, an intraday was below even the 40-day average today. So the relative strength in these sectors is a sign that this is where you might see at least some short-term performance, kicking in, and those are the places you would really focus on. So I think the FMCG sector correction is done. If it's holding above the 20 DMA, it's probably already started to move higher ahead of the other indices, and that's a good sign.
Sure, Rohit, any specific stock that you are seeing a lot of opportunity in? Of course, the power finances like REC, PFC have been doing well, JSW Energy, or the rest of the power stocks. Any particular stock from whether power or any sector?
So let me just highlight, we don't make recommendations. We are not investment advisors, but I'll tell you one interesting large cap stock because, and we all know it, it's Reliance Industries. It's been a laggard, and I'm waiting for quite a while actually see it start leading again, because it has pulled back almost 50% of the gains that it made in the last quarter, which puts it at an interesting level. And it will have to become one of the drivers of the next wave to new highs. I think large caps, like I said, need to really catch up in this market, because we are seeing earnings growth. If we simply look at the Nifty earnings growth, we are at like 30% in the last quarter, Y on Y. And the Nifty itself has only gone up by 5% in the last month, and not more than 15% in the last 6 months. So when we look at that kind of, not last month, I'm saying last quarter 5% and last 6 months 15%. So when we look at that kind of an underperformance relative to earnings, it's clear that the Nifty is lagging far behind, which is why the PE ratio is not picking up, and you really need large caps like Reliance Industries to start participating and provide that momentum. So I am really watching closely that stock. The RSI, for example, for RIL would be sub 30 right now, which means it enters the oversold territory, and that should put it in a point where we start seeing it pick up and contribute to the indices.
Okay, let's see when Reliance Industries finally contributes. But yes, for now has been a massive underperformer. Thanks so much, Rohit, for joining us today on the show. But time